Well, several reactions continue to trail provisions of the amended Companies and Allied Matters Bill. It's not an act, actually, but the Corporate Affairs Commission says it's not aimed at witch-hunting churches or any other organization, but it warns that those who fail to comply will have themselves to blame. Lara Afolayan reports.
The President's assent to the amended Companies and Allied Matters Act has generated several reactions. In the wake of the development, a CAMA 2020 hashtag surfaced on Twitter, condemning the document as suppressive. The Socio-Economic Rights and Accountability Project, SERAP, has particularly spoken against the law on social media. It now wants the President to repeal it in 14 days or face legal action. Religious bodies have also been making their reservations known on the issue. The Corporate Affairs Commission now dismisses these arguments as untrue. It says it is only trying to make organizational procedures fall in line with best practices.
This is not targeted at any particular group, but what we have done is to bring our laws to be consistent with what obtains in other countries. Some of these provisions were borrowed from the Charities Act of the UK. And even with what we have, we are nowhere close. We are still not as stringent as what you have under the Charities Act.
The Commission, however, sends a note of warning to those who fail to comply with the law's provisions, as they risk facing applicable sanctions. This is against the background of hopes the legislation will improve the country's ease of doing business.
The law has brought a lot of innovations towards entrenching the ease of doing business initiatives of the government to support businesses, but particularly small and medium-scale enterprises. We've also strengthened the legal framework for registration and regulation of associations registered as incorporated trustees.
One of the arguments put in place by the authorities in defense of the bill's full disclosure clause is that foreign donors who give Nigerian entities funding support desire to know how such monies are utilized. The Corporate Affairs Commission says organizations that cannot comply with provisions of the amended CAMA may have to deregister with the Commission. Implementation of the new laws may likely begin in October after they have been gazetted by the legislature. Lara Afolayan, TVC News, Abuja.
Now let's make more sense of this. I have the Registrar and Chief Executive Officer of the Corporate Affairs Commission, Alhaji Garba Abubakar. He's joining me live from Abuja to talk more on this. Alhaji, thank you very much for your time. We talked about this some weeks ago and we are here again today.
Thank you so much for having me.
Now, there have been unease, or I would not say uproar, over this Companies and Allied Act issues, which was signed on the 7th of August. Like I said earlier, we talked about this before now, and now tell us more about the new changes and the gray areas that remain, we could say, unattended to at the moment.
Okay, thank you so much. The new law has 870 sections, and is divided into 7 parts. 167 sections are completely new, while 91 sections modified some of the provisions of the repealed act. There are a lot of innovations. Unfortunately, the negative narrative on associations seems to even becloud all the successes that is supposed to be recorded with these new changes. This law is intended to achieve 2 objectives. 1, to entrench and codify the ease of doing business principles of the government, and 2, to strengthen the regulatory framework and provide for greater disclosures by entities registered by the CAC. On ease of doing business, so many innovations have been introduced. The issue of statutory declaration, the mandatory statutory declaration by a legal practitioner at the point of registration of a company is now made optional. If you are the owner of the company or your agent can simply do a statement of compliance, and that statement will suffice for the purpose of the company registration. And this will reduce the cost of registration, because what the World Bank measures is not just the time it takes to register. They also measure the number of processes and the cost. And one significant area of cost was actually the professional fees that is usually paid to the agent engaged in the formation of the company. So since it is now optional, it means the owner himself can do a simple statement of compliance, and CAC will accept that as sufficient proof that the requirements of the law has been complied with. So the cost that is usually factored for professional fees constitutes almost 60% of the total cost of registration. This is automatically taken out. The second issue has to do with the capacity to form a company and who can form a company. In the past, you require 2 persons to register a company. We now have the concept of one-man company, which means if you don't want to go into partnership with anybody, or if you don't want anybody to be part of your company, you can register a company alone, and that company has all the features of a company duly registered. It will have perpetual succession, it will have capacity to sue and be sued in its own name, and that company can exist in perpetuity. Another significant change has to do with the issue of preemptive rights for private company. In the past, except where the Articles of Association provides, where shares are increased in a company, or where a shareholder wants to sell his shares, the directors may decide to give it to somebody outside the company to buy the shares. But the law now requires that, as of right, anybody that wants to leave the company must give the first option to the existing shareholders. It's only when they refuse to buy or when they decline that you can bring an outsider to buy the shares. Another significant change has to do with weighted shares. In the past, every share must carry 1 vote. Even where you have preference shares, they must carry 1 vote. But the law has now relaxed the rule. You may have preference shares that may carry more than 1 vote in certain circumstances. Another issue has to do with small companies. There are certain exemptions that have been given to small companies because, as I have said, this law is aimed at promoting ease of doing business and promoting small and medium enterprises. So in the past, there was a mandatory requirement for every company to have a secretary. Whether a secretary does anything or he doesn't do anything. We all know that some of these companies are very small in nature. Some may be husband and wife company. Why do we have to impose additional burden on them to have a secretary? So the issue of secretary for a small company is optional. They may decide not to have a secretary. And a small company, by the definition of the new law, is a company that has a share capital, a turnover threshold of not more than 100 million, net asset threshold of not more than 50 million, and that is on that majority of the directors must have, the directors must have majority of the shares, and there shouldn't be any foreign or government participation in that company. But as I have mentioned in earlier engagements, we are looking at the possibility of harmonizing these provisions with what obtains in the Finance Act with respect to the turnover threshold of small company to make our laws uniform. The Finance Act talks about turnover threshold of 25 million. The law has given the CAC the right to either raise or reduce the turnover threshold. So very soon after the gazetting, we'll come up with regulations that will actually bring down the turnover threshold to 25 million and net asset threshold to 12.5 million. Another issue has to do with the issue of disclosure of persons with significant control, which is beneficial ownership. I think I have alluded to this in our earlier engagement. This is one critical area that will bring our laws in line with the various anti-corruption initiatives of the government and to make it in line with some of the commitments the Nigerian government has entered into under the Open Government Partnership, the Extractive Industry Transparency International, and the Financial Action Task Force commitments. All these international organizations, their membership, to be a member, you are required to have a register, a public register of beneficial ownership. Until now, we didn't have the enabling legal framework. With what we have now under CAMA, every company, if you are a shareholder in any company with a share capital threshold of 5% or voting right of 5%, or where you, by virtue of your position, you control the appointment of the majority of the directors, or you exact any form of influence or control in the way the company is being run, the law says you must disclose that capacity immediately you become such, and whenever the company is filing annual returns, that information has to be disclosed. Another issue is the issue of company seal. The use of common seal is now optional. A company may choose not to have a seal. Another significant change has to do with the legal for resolving insolvency. Until now, the law provides for receivership and liquidation. These two processes, the company, any company that borrows money was usually at the mercy of the lender. There was no provision where the company on its own or on its own terms will provide ways of resolving this insolvency. It's either they pay the money as demanded by the lender, or the lender will exercise his right to appoint a receiver, and where the receivership could not recover all the money, then they go into liquidation. And we all know that most receivership end up in the companies, in those companies being liquidated. So we now have a legal provision that allows for company voluntary arrangement, where the company may approach the court to appoint an administrator from outside the company that will manage this company and to ensure that, one, the creditors are paid, and two, to take care of the interests of other stakeholders. And these stakeholders may include employees and even the government that gets taxes from this company. So this is a good opportunity for companies to resolve their insolvency without actually getting the lender to exercise his right, which is usually a hostile process that ends up killing the company. With this new arrangement, you will preserve jobs. One issue that arose from this new arrangement is the provision that says those that are qualified to be accredited as insolvency practitioners should include members of BRIFAN. People have questioned that BRIFAN is a private organization. But the truth is, at the moment, we do not have any professional body in Nigeria that actually trains people on business rescue other than BRIFAN. And other organizations like ICSAN, like ICANN, they all started as private organizations before they get their charter. So we cannot say, and the argument does not even hold water, because there are so many other organizations that are private but are recognized by status. Okay. Even the members of the board of the CAC, you have representatives from Nigerian Bar Association, which is a private organization. You have representative from the Manufacturers Association of Nigeria, Indeed. Which is a private organization. You have a representative from NASIMA, which is also a private organization. So people should look at the objective and what it seeks to achieve. And the law didn't say this should be exclusive to members of BRIFAN. The law says if there is any other profession that CAC feels it should accredit as members, so that CAC still has the power to look at other professions. Maybe if there are lawyers outside membership of BRIFAN that the CAC thinks are qualified to do business rescue, they will be accredited, or other accountants.
Registrar, so, let me butt in now. Well articulated now. I think there needs to be more sensitization. Nigerians need to really understand what is at stake and all of this you've itemized. But I want to be particular now with regards to, like you also said, issues around association. CAN has come out and rejected a section of that act. You have said this is not targeted at anybody. In a statement on August 20th, they described the act as unacceptable to them. They want President Buhari to return to the National Assembly for amendment and to stop the implementation of that law until religious institutions are exempted from it. How does this come to you?
Well, you see, we have to distinguish the governance of these institutions from their spiritual activities. The law says where two or more trustees are appointed by any community of persons bound together by custom, religion, or kinship, or where any body or association established for any religious, literary, scientific, cultural, or such other purposes, then they may apply to register, and the trustees will be the legal representatives of the association, and they become a corporate body. These associations, one fundamental distinction between associations registered as incorporated trustees from other business entities is the income and property of these associations cannot be shared by the members. It should strictly be applied to pursue the objectives of these organizations. And this income, even where the trustees are the sole contributory to this income, it cannot be their personal property. Is no longer the personal property, and they are accountable. And what the law simply provides is, where you have cases of misconduct or misappropriation, or where it is desirable for the purpose of protecting the property of the organization, or ensuring the proper application of this property for the objectives for which that association is established, or where there is any fraud, or in the public interest, CAC may suspend a trustee and appoint an interim manager. But in addition to this provision under section 839 subsection 1, subsection 7 says there has to be an inquiry. So a CSE cannot just by fiat remove a trustee. And I cannot understand why people are afraid of accountability. If you are a trustee, you are accountable. You have to divulge the assets of the organization from your own assets. And nobody will remove you without subjecting you to inquiry. You will have the opportunity to defend yourself. You'll be heard. You are even entitled to legal representation. If at the end of it, it is found that you are culpable, CSE can suspend you. And after you are suspended, that is not the end. If you still do not agree with this, then you can go to court. And CSE cannot just suspend on its own, because the law requires that the minister's approval is required. The Honorable Minister of Trade has to approve the report. You have to go through the process of Administrative Proceedings Committee, even after, which is chaired by the Registrar General with membership from the departments and the Ministry of Trade, even and some observers, though the observers may not have voting right. But even where the Administrative Proceedings Committee has finished its own assignment, the report must be tabled before the board of the commission. Our board comprises of a chairman who is independent. Then you have representatives of the Nigerian Bar Association, representatives of NASIMA, representatives of MAN, representatives of Institute of Chartered Secretaries and Administrators, representative of National Association of Small and Medium Enterprises, representatives of Federal Ministry of Justice, Federal Ministry of Finance, Federal Ministry of Industry, Trade and Investment. So all these people are there to look at this report. It's only if they are satisfied that the recommendations are okay, then they will now recommend to the minister, and the minister will approve. So nobody will just be removed just like that. You see, this law, what we are trying to provide, one, as I said, is to strengthen the regulatory framework. And on other grounds, outside what is enshrined in subsection 1, CSE cannot suspend without recourse to the court. And what are we talking about? Within the association, the power to suspend lies even with the general membership. But the challenge we have, most of the associations that are bill registered, there is no difference between the trustees and the members. An association that you may think has 1,000, 2,300 members, if you check our records, you discover that the trustees are the only members on the record. And by law, they're the only members that can take decisions for the association. So where these trustees are called for, how do you expect them to suspend themselves? How do you expect them to suspend themselves? So they will entrain themselves and cover up for all this. In addition to that, the law now requires that there must be accountability. The association must file its financial statements every year with the CSE together with its annual returns. And the account must be audited. And they must maintain income and expenditure records on day-to-day basis. Every money earned has to be recorded. Every money spent has to be recorded.
Registrar Chief Executive of the Corporate Affairs Commission, I think we have to continue this discussion. It's really getting interesting, particularly with regards to how it affects association. There's definitely going to be a part 2 of this, but this is much time can take today. Thank you very much for joining us on the show. It's been very brilliant and incisive having you talk to us on this issue.
Thank you so much. Thank you so much. Thank you so much. Thank you.